the amount of silver that's left the Shanghai Futures and Exchange, the Shanghai Gold Exchange, is just absolutely enormous. How much they've been using and how much they've been shipping out either to the LBMA or for other reasons. The combined inventories of the Shanghai Gold Exchange and the Shanghai Futures Exchange are the lowest they've been since the first quarter of 2017. I mean, I look at the chart on Nick Laird's website, and I published it in my column, I don't know, 2 or 3 weeks ago when this was going on. And I said, I made it the comment, I said, I just, the Chinese have, a seat on the LBMA. They know what's going on. I said, it's only a matter of time before they're going to step in and halt exports of silver out of China because of their, disastrously low inventory levels. And lo and behold, look what came up. This on October the 26th. It's strange. We had our last, like you said, we had our last conversation August 22nd. Probably it was the next day the silver price started to go. And like you said, we've been in rally mode up until about a week or so ago. I think it was the 17th of September when the commercial traders stepped into the market on a Friday and capped the rally. It's a combination of a whole bunch of things that, there's first of all, the debt. I think it just turned over 38 trillion. And then there was talk about interest rate cuts coming in October. And of course, we've already had that. And now they're talking about whether or not they're going to have one in December. That's sort of up in the air at the moment. But, it's a combination of, the economy and, the situation abroad and currency depreciation. We're well along what I call the road to perdition, where the fiat currency system is coming to an end. And, we've had a huge run up in gold and silver as well. And, this is just, everybody's starting to see the writing on the wall. And, we're starting to see, other major financial institutions like JP Morgan and Morgan Stanley and Ray Dalio and a whole bunch of other high-profile people saying you have 10, 15, 20, 25% of your portfolio in gold. And, of course, silver's in a structural deficit. So it's a whole combination of things that took us up to the high that we had. And, it was starting to run away to the upside. And, if the bullion banks and the whole, bunch of crooks hadn't stepped in, we'd be looking at some fantastic prices for silver and gold. So, this correction, if you quote unquote healthy correction, which it really isn't. It was, a manufactured correction. If they hadn't stepped in, heaven knows what the prices of silver and gold would be by now.
The rally was not just driven by fear or inflation hedging. On the silver side, structural supply deficits have now become a defining theme. The market is not simply reacting, it's being reshaped. Data show that mining output is struggling to keep pace with rising industrial and investment demand. Analysts note that 3/4 of silver production comes as a byproduct of mining for other metals, meaning the supply response is muted even as price rises. The confluence of monetary distortion plus real supply constraints created a powerful launchpad for higher silver valuations.
Absolutely. There's no question about it. I mean, we've been in a structural supply deficit in silver now, for 5 years, going on almost 6 now. And, this is starting to, manifest itself in the price. And this big run-up it certainly looked like it had all the manifestations of a short squeeze, although there's no real way of telling, Jesse. And the reason is because the U.S. is shut down. The U.S. government is shut down. We haven't seen a commitment of traders report since the 23rd of September, so that's 6 weeks ago. So there's no way of telling, what's going on under the hood. But you're right. This is starting to take off in Ted's bonfire of the silver shorts, and there certainly has been short covering going on because I've been watching gold and silver open interest, and they've been coming down like a rock, especially gold. And so there's no question about the part of this rally was short covering because the short position is just absolutely choke a horse. And that's one of the reasons they had to step in, because Ted's bonfire was lit. And if they didn't step in, like I just said, to answer your previous question, we would have seen the silver and gold prices that we can't possibly imagine. And that was the start of it, and so they had to step in. And but once this managed correction, or what I call a wash, rinse, and spin cycle, is done, we had one in early April like that too. It lasted a week or so, and then we were off to the races again. And this one may last a little longer and go a little deeper, but the end result will be the same. We'll take off to new highs. Now, there's one thing you have to remember. At the low in April, I think silver got down to around $27 an ounce. Well, since the low in April and the high in 2 or 3 weeks ago, silver's almost doubled in price. So this is just another correction, and once this one is done, we'll be off to the races to higher prices, because the silver deficit has not gone away. It's getting larger and larger all the time, and the problems they had in the LBMA last month, running out of silver. I mean, the foreshocks are there that we have to have much higher silver prices to close this structural deficit.
As silver climbed aggressively, bullion banks and commercial traders stepped into the fray. Their intervention, whether through short positions, hedging, or deliberate market caps, triggered what many call a wash, rinse, spin correction, a pause disguised as a healthy retracement but arguably engineered. With open interest shrinking and short covering accelerating, the rally lost steam. While breakout momentum seemed imminent, the correction halted it. Some observers suspect the correction was not natural consolidation, but a tactical maneuver by large participants seeking to reset the terrain before the next leg up.
Well, you have to remember, it's very easy. The commercial traders, the bullion banks, and commodity trading houses, they've been on the short side forever. And all the other traders, the other reportables, the managed money, the small traders, they've been net long gold and silver forever. So when the price starts to rise, when the traders, the small traders and the non-commercials, start to put on long contracts or start to cover short positions, somebody has to take the short side of that trade, and it's always the bullion banks. So as the other reportables and managed money traders pile in on the long side or cover shorts, the bullion banks and the bullion banks go short against them. So the short position the commercials get more and more short until they get to the point where it is a huge short, it's a very usurious short position. They're short about 60 billion ounces, or $60 billion in the COMEX futures market right now. And, they waited until all the managed money traders, et cetera, had piled in on the long side. And when they got as many mice in the trap as they could, then things started to run away. They pulled a lever on it, like I said, back on October the 17th. So, the bullion banks have been fighting this commodities rally in the gold and silver all the way up, and this is, like I said, this is just a pause before we head higher from here.
This isn't your typical commodity cycle. The Silver Institute and other industry watchers report that silver is facing its 5th consecutive year of annual supply deficits. Even more telling, industrial demand is relentless. One recent chart shows silver's industrial use rising some 3.6% annually, even as supply growth stalls or shrinks. In short, the market mismatch isn't a simple temporary spike, it's structural. That implies that when silver breaks out again, it may move into truly new terrain.
What happened was that the LBMA basically ran out of, they have a float there of stuff that they can ship out the door that has no claims on it. And the fact of the matter is they just plain ran out. And one of the reasons they ran out is because of the huge purchase that India made, which they back in September, I think it was the headline of they bought 31 million ounces of silver in September, which was all got delivered in October. And the LBMA just simply flat ran out. I mean, they had no silver at all. Okay, and the lease rates shot higher. If you wanted to borrow it, it became very expensive to lease it. And they had to fly in silver from all over the place. Switzerland, United States from the COMEX, and even the Shanghai Futures Exchange chipped some silver. And to give you some idea, I got the numbers right here because I write them down every day. In September, silver was, and this is the COMEX, there's 27 million ounces shipped in, but only 14 million shipped out. But in October, when the crisis hit on the LBMA, now that October is done with, there were 10 million ounces of silver shipped into the COMEX in October, but 58 million plus troy ounces were shipped out. And that went to London to fill the orders that they had there. And Switzerland, I'm sure, contributed some, but we won't know that until another week or so. But the fact of the matter is that the LBMA flat ran out of silver, and they had to top it up from the COMEX and probably from Switzerland as well. So, as I said in my column this morning, they got, maybe 10 or 20 or 30 million ounces worth of float over there. But basically, they saw the bottom of the barrel a month ago, and they don't have much left. And with this deficit going on, it's not going to take them long to chew through whatever's been sent over there from the COMEX and from Switzerland. Because I think the Silver Institute said the deficit this year would be around 150 million ounces. Well, if they got 30 or 40 million ounces over there, they're going to go through that before Christmas, or early in the year. So, and it was a critical time, and they moved heaven and earth to put out that fire in the LBMA. But it's just a matter of they put off the inevitable. 2 or 3 months down the road, they're going to be faced with the same situation where they just don't have enough silver, and the battle will be on to find more silver to fill up the LBMA because the last thing they want to do is default. But sooner or later, with this silver deficit running on 5 years, they can't keep it up forever.
Behind the scenes, inventory metrics and institutional flows tell the rest of the story. While retail buying often grabs headlines, institutions have quietly been positioning in silver-backed ETPs at a notable clip, and lease rates and spot future spreads indicate physically tight conditions. Meanwhile, major exchange vaults and refiners are reporting record low visible stocks. The result? When supply can't respond and demand is compressed, the latent potential becomes enormous. Add to that monetary policy dynamics, lower real yields, weaker dollar, inflation concerns, and silver becomes more than a metal. It becomes a story of finance, industry, and macro.
There is a problem getting product. There's no question about it. I know that there's restrictions at the Royal Canadian Mint. They had a large buyer come in there, was it last month sometime, and bought every single solitary troy ounce of gold they had.
Wow.
Bars, coins, the whole 9 yards. They bought the whole thing. And now the Mint is only producing the maple leaf. I don't even know if they're just whether it's the 1 ounce or the whole size range or not, but that's all the Mint is producing. The Royal Mint in England has faced the same problem, and there hasn't been any sales we haven't seen the October sales report for the U.S. Mint yet. They've been very tardy in reporting their sales, but there's no question about it. It is for the retailers. It's been hard to get product during October and parts of September when the price really started to go, because retail bullion sales went absolutely crazy. I remember Keith Neumeyer stating something that October or September, I can't remember which month it was the biggest sales month of all time. Of course, they don't have any trouble getting supply because they mine the stuff and then just have it smelted at Salt Lake City at Asahi and then ship it to the refiner. So it's not a big deal for them. But no, the reports about there being shortages and getting retail silver are absolutely true.
So where do we go from here? The correction may fade into the rearview mirror as the structural themes reemerge strongly. If the wash phase ends and supply remains constrained while demand builds, silver may head into a sustained bull phase. Some analysts suggest new highs are on the horizon, and while timing is uncertain, the fundamental runway is intact. Risks remain, for example, substitution in industry, policy surprises, or above-ground stock releases. But the confluence of debt dynamics, monetary stress, industrial demand, and supply bottlenecks has created a rare alignment. In short, silver is poised, ready to act.
There's a lot to unpack there. I'm going to go back to the previous question you asked, you were asking about the LBMA. I said, well,
Yeah.
there was silver shipped out of the COMEX, and it was shipped out of Switzerland. It was shipped out of the Shanghai Futures Exchange, the Shanghai Gold Exchange. And what I didn't mention at the time is that the amount of silver that's left the Shanghai Futures and Exchange, the Shanghai Gold Exchange, is just absolutely enormous, how much they've been using and how much they've been shipping out either to the LBMA or for other reasons. The combined inventories of the Shanghai Gold Exchange and the Shanghai Futures Exchange are the lowest they've been since the first quarter of 2017. I mean, I look at the chart on Nick Laird's website, and I published it in my column, 2 or 3 weeks ago when this was going on. And I said, I made the comment, I said, the Chinese have, a seat on the LBMA. They know what's going on. I said, it's only a matter of time before they're going to step in and halt exports of silver out of China because of their, disastrously low inventory levels. And lo and behold, look what came up, this on October the 26th. Now, it is going to be interesting to see how this plays out. Okay, China would have a good case for absolutely cutting, silver off at the knees for export purposes, because their silver inventory levels are critically low. So that's just one straw in the wind. You've got the LBMA at record low levels. You got the Shanghai Futures Exchange and Gold Exchange at record low levels, and then add to the list, like you just mentioned, the fact that the U.S. is considering putting it on the list as a critical mineral. I mean, you got all these things coming together, confluence of forces coming together in the silver market right now, from every direction that you can imagine. It just absolutely screams that higher prices are coming down the road. So, we're all sitting here waiting to see what the government does about this. And I wouldn't be at all surprised if they added that, and if they start to stockpile silver. Good luck to them, because I don't know where it's going to come from.